However, once the move shows signs of losing strength, an impatient momentum trader will also be the first to jump ship. Therefore, a true momentum strategy needs to have solid exit rules to protect profits, while still being able to ride as much of the extension move as possible. The 5-minute Momo strategy does just that. What's a Momo? The 5-minute Momo looks for a momentum or Momo burst on very short-term, 5-minute, charts. First, traders lay on 2 technical indicators that are available with many charting software packages and platforms: the 20-period exponential moving average, EMA, and moving average convergence divergence, MACD. EMA is chosen over the simple moving average because it places higher weight on recent movements, which is needed for fast momentum trades, while a moving average is used to help determine the trend. MACD histogram, which helps us gauge momentum, is used as a second indicator. The settings for the MACD histogram are the defaults used in most charting platforms. EMA equals 12, second EMA equals 26, signal line EMA equals 9, all using closing prices. This strategy waits for a reversal trade but only takes advantage of the setup when momentum supports the reversal enough to create a larger extension burst. The position is exited in 2 separate segments. The first half helps us lock in gains and ensures that we never turn a winner into a loser, and the second half lets us attempt to catch what could become a very large move with no risk because the stop has already been moved to break even. Here's how it works. Our first example above is the euro to US dollar on March 16, 2006, when we see the price move above the 20-period EMA as the MACD histogram crosses above the zero line. Although there were a few instances of the price attempting to move above the 20-period EMA between 1:30 p.m. and 2 p.m. ET, a trade was not triggered at that time because the MACD histogram was below the zero line. We waited for the MACD histogram to cross the zero line, and when it did, the trade was triggered at 1.2044. We enter at 1.2046 plus 10 pips equals 1.2056 with a stop at 1.2046 to 20 pips equals 1.2026. Our first target was 1.2056 plus 30 pips equals 1.2084. It was triggered approximately 2.5 hours later. We exit half of the position and trail the remaining half by the 20-period EMA minus 15 pips.